Ladies and gentlemen, my name is Greg Michalowski for ForexLive.com, and this is a technical picture look at the euro versus US dollar. Today's date is September 12th, 2014, last trading day of the calendar week. And what a week it has been in the euro versus US dollar. I'm going to go straight to the hourly chart because there's no other chart that we need to look at to get the technical idea of what's happening in this currency pair. We remember last week and the week before where the market moved to the downside, trended to the downside. As a matter of fact, this week is a different story. This is Monday, this is Tuesday, this is Wednesday, this is Thursday. The market's been in a 103 pip trading range, not much of a trading range for the pair. Moreover, we've been able to find resistance in today's trading, not only against the top side trend line, but also the bottom side trend line. We currently stand right around the 100-hour moving average, which finally caught up to the price after last Thursday's move to the downside. And so we're at this neutral zone here for the euro versus US dollar. What does that say to you when the market does this type of pattern? What it says to me is that the market doesn't know which way it wants to go. If it knew which way it wanted to go, it would move. But it's not moving. It's moving to the downside, then to the upside, and then the downside, and then to the 100, and then back down, and then above the 100, and then back down through the 100. It doesn't know what it wants to do. So if something's going to happen over the next 24 hours, guess what would give you a clue of what the market wants to do? And just looking from the trend line perspective, if we break above the top side trend line or we break below the bottom side trend line, that would give us a clue to the bias. It would be something that we haven't done this week, or we didn't do, at least in trading here today, was move above a trend line or move below a trend line. So that's what I'm going to go off of the next 24 hours or the next 8 hours or the next 4 hours, is what happens at these trend lines. We're moving closer and closer to the finish line. Let's see if we can extend the trading range for this week. Speaking of, the range is only 103 pips. That's very narrow. So I'm still going to keep my options open for the potential for a move outside of the high or below the low. There is room to roam, and if you know there's a potential for room to roam, that's an advantage to your trading. It might allow you to keep open a trade that might see the price move up to the 200-hour moving average, or maybe the 50% retracement level. 200-hour moving average comes in at the 130 level. The 50% comes in 130.08 level. Or if we break below the low, we're going to be looking for further selling pressure that could see the price move on, or start to think about the price moving down toward the 127.86 level. That's a 61.8% retracement of the move up from the 2012 low to the high. I don't think we're going to get there tomorrow. It might have to wait till next week, but if the market does start to move to the downside and stay to the downside, that would be the next major target for this currency pair. If you like this video and want to see more of them, please come to our YouTube website for Forex Live and click on the subscribe button. If you want more information on trading foreign exchange and also on news that's affecting the Forex market and other markets, please come to our website daily, 24 hours a day, 5 days a week, ForexLive.com. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.